episode number 5. So I kind of want to talk about diversification now, and what does this really mean to us? Now, diversification is exactly what its definition is. Making sure you're investing in different industries or different stocks to ensure that you will not lose all of your money if one stock or one industry completely crashes or goes to the ground. This is a good way of protecting your assets and investments so you don't lose everything over time. Now, for example, I find that a lot of people around my age in their 20s oftentimes find themselves only investing in technology stocks. And what happens is that the great fluctuation, and we've seen this incredibly with AI, that there's this bubble and people are riding this wave until it will inevitably crash at some point. And when it does crash, those people who have only invested in tech stocks will lose everything that they've owned. Now, a smart investor who's invested in multiple different assets and multiple different things, let's say they've invested in real estate, or let's say they've invested in the food industry and the tech industry and the pharmaceutical industry or the oil industry, their investments are protected. Now, a real life example of this happening to me, and which ensured that my investments were actually very well protected, was this recent kind of issue with the war going on. So what had happened is that there's a lot of public kind of anxiety, and that was reflected heavily in the market. But what we did see was that oil companies did especially well. So even though there are some sectors in my portfolio that were not doing as well, like in technology or in pharmaceuticals, the oil stocks that I had invested in did incredibly well. And just an unfortunate part of war is that the stocks or the companies that do well in those kind of environments, you're going to see that reflected in their stock price as well. So that was just an example of how my portfolio was protected in those instances. I had initially invested in Chevron at 140, about around when the leader or the dictator of Venezuela was captured. And I figured it'd be a great time to invest in oil, given the amount of oil resources that exist in Venezuela, right? And from then on, we saw a dramatic increase in the war in for the U.S. and Iran and Israel. We saw an even greater increase in the stock price of oil. Now, we hear a lot about the fact that there's a shortage of oil. The Strait of Hormuz is closed. But a thing that I found incredibly interesting with that is that the price of oil, although that went up, the stock price still went up as well. And usually you'd expect the complete opposite. But I think when you think about oil, it is an inelastic demand. So no matter how high you increase it, people will still need to get to work every day. People will still need to drive their cars or operate things every day. So I think that's an unfortunate kind of situation where these big oil companies have taken advantage of the fact that oil is an inelastic commodity, and that has allowed them to essentially price gouge and sell it at a price that's way higher than the value of what it's worth. And